Welcome to MezFi Meets, a podcast where we bring you conversations from the cutting edge of blockchain, AI, financial services, and property with interesting people doing amazing things. MezFi is an investment manager in Australia, and if you'd like to find out more about us and our products, go to www.mezfi.com. In today's episode, we speak to John Bassilios from Hall and Wilcox Lawyers. John is a financial services lawyer who has developed an expertise in blockchain law in Australia. He advises clients in crypto businesses on how Australian laws apply to them. He is also a director of Blockchain Australia, having served in that capacity for 5 years now. If you enjoy our content, please consider hitting the like button and subscribing to our channel. Let's jump into today's episode. Hey everyone, it's MezFi Meets Jerome and John, the CEO of MezFi here today with John Bassilios from Hall and Wilcox and Blockchain Australia. How are you, John?
Very well. How are you?
Very well, thanks, mate. Now, John, as I understand it, you've been working a long time as a financial services lawyer, less time in blockchain, and you've been 5 out of 6 years tenure of Blockchain Australia. It's unusual for a lawyer of your stature to be so interested in something which, to some people, is quite niche in terms of crypto assets and blockchain. Maybe I'd be really interested in perhaps listeners today would be interested in what got you interested in blockchain in the first place.
Yeah, sure. So, as you mentioned, I'm a financial services lawyer of almost 20 years. And back in 2017, I had a client come to me and they wanted to create an index fund for the top 20 cryptocurrencies. And I gave them the advice. It was a funds management 101 advice. And at the end of it, I thought, you know what, I don't know anything about crypto. Bitcoin, blockchain, and ICOs at the time, they were kind of all over the headlines.
Yeah.
It seems closely related to the financial services work that I do. I should go and educate myself so I can at least have an intelligent conversation, with clients that are doing stuff in this space.
Yeah.
So I started, reading about Bitcoin and blockchain, and the more I read, the more I wanted to read. It was like going down a bit of a rabbit hole.
Sure.
And after a few months, I thought, wow, this is just an amazing technology. It's going to touch our lives in so many ways, personally, professionally, through government. I want to try to stay ahead of the curve here because I can see the opportunity here for me and my practice, and also the opportunity for the economy as a whole. So as it grows, as the industry grows within the economy, obviously the practice will grow as well. So I started writing all these articles about blockchain generally, what it is, and sharing it with clients. I started writing articles about the legal implications of setting up crypto exchanges, the legal implications of setting up crypto funds, and the legal implications of doing ICOs at the time, which, as I mentioned before, were pretty big back then. And it just snowballed from there. I got started getting invited to speak at conferences, and people started reaching out to me because either they'd seen me at a conference or they'd come across my material online. And it's just grown significantly since then. And I've been really heavily involved in the industry. I was a course mentor for the first run of the RMIT blockchain strategy course.
Oh, wow.
I was a director of the Foundation for International Blockchain Real Estate Expertise, which is a Dutch foundation which promotes the intersection of blockchain and real estate. And as you mentioned earlier, on the board of Blockchain Australia. It's an area that I'm really passionate about. And as I say, quite often, it's kind of re-invigorated my practice of the law and has made it a bit more exciting, put it that way.
Yeah, wow. I mean, look, I get so excited. I mean, I have that TradFi background as well. And having, I'd done some early investments in crypto, but then really came back to it in about 2020 or so a few years after you did. But yeah, I felt the same way, just so energized. And it is, I mean, you're, like you say, I always see you around at events, and as part of Blockchain Australia, you were at Blockchain Week last week. We didn't actually see each other there because I was in and out very quickly. But it must be very different moving in those circles than in the traditional, legal financial services world.
Absolutely. I mean, one thing that I mention quite often to people when they say, why are you so interested in this space? It's because everyone wants to know you. Everyone wants to be your friend. Everyone wants to help each other in the industry, which is really different to traditional financial services.
For sure.
So one anecdote that I quite often give is that in my, say, 20 plus years practice of traditional financial services, I've probably made friends with, 2 or 3 people who are clients or in the industry in terms of being like real friends. Whereas since I've gotten into the crypto space, I've probably made like 100 friends. It's just such a different vibe and a different feel, and I just love it.
Yeah, no, it is totally different, totally different. So, so if you got into it in 2017 and you've been on the Blockchain Australia board for 5 years, 5 years to 2024 would be 2019. So, who was it that indoctrinated you or got you on the board of Blockchain Australia then?
Well, you get voted in, but at the time I was, I had gone on a Austrade and Blockchain Australia delegation to Shanghai. It was a massive blockchain conference there, and I got to meet Nick Giretto, who was the CEO of Blockchain Australia, and quite a few people in the industry there. When we got back, Nick mentioned that there were elections coming up for the board, and that maybe I should run, and that I could probably add a bit of value to the board. So I took on board his recommendation and put myself up and was voted in.
The rest is history.
You get voted in for 2 years, and you have to get voted in again after the end of your 2 years. And thankfully, people have had faith in me to vote me in 3 times. So, yeah.
Well, as you said to me prior to the call, you have a maximum of 6 years on the board of Blockchain Australia. So that means that you'll be finishing up next year. I mean, apart from your work in the industry, do you see yourself continuing to have a more sort of hands-on role in organizations through the blockchain world going forward, or do you think that's going to be your time and you just focus on the role?
I hope for my firm to continue to be a member of Blockchain Australia, and I will hopefully continue to be a member of the Digital Assets Working Group, of which I'm now board sponsor. But I'll just be a normal member of that and contribute to the consultations that Blockchain Australia makes submissions on with government and other regulators in this space. Because I don't think my just because I'm not on the board, I don't think my passion for the industry will wane. If anything, I think it will just grow, continue going.
Yeah, no, and then look, that's very much what hit me when we first met was how passionate you are about blockchain and blockchain technology, and you care so much about the the companies that you help as well. One thing that I'd like to get your take on, I think you're very, being, and I'll say, you don't have to say this, but I will, the preeminent blockchain legal, mind in Australia. Well, look, that's in my opinion anyway, and I'm sure, and a lot of people's opinions as well as being on that Blockchain Australia, as a director. It would, I'm assuming, because it makes me upset, sadden you to see so many Australian companies looking further afield overseas, because of this lack of regulatory clarity that we've had for so long. I guess it's a 2-part question. The first is, do you think that the recent Treasury papers have done enough, if they were to be followed through, to sort of accurately assess and look at that regulatory uncertainty? And if not, or if so, what more do you think, or what kinds of things do you think should or could be done to improve Australia as a really vibrant and exciting blockchain destination or place for business?
I'll start off by saying back in 2019, I think Australia was seen as being a bit of ahead of the curve. Companies were flocking to Australia to do stuff in Australia, both exchanges and otherwise, and I did quite a fair bit of work for international exchanges coming into Australia. Unfortunately, the current Treasury consultation in relation to licensing of digital currency exchanges and custodians doesn't solve the issue which is causing people to go overseas. And that issue is this. it doesn't solve the issue of when a token is or isn't a financial product. The paper says that if it's a financial product, then it continues to be regulated under the existing regime. But to the extent that it's not, then these are the implications for exchanges and custodians. So it doesn't deal with the main issue. So the way in which we can foster innovation and keep people here and not going overseas is to provide that regulatory certainty by either introducing a crypto-specific legislative framework for the regulation of digital assets and offers of digital assets, which is not the same as that for financial products in Australia. So as an example, other jurisdictions have taken the approach of, well, we're not going to try to work out whether or not it is or isn't a financial product, but if it's got these crypto features and it's on a blockchain, then these are the things you need to do without having to work out whether or isn't a financial product. That's quite a neat solution, which I think would be quite helpful.
Are you referring to, Dubai specifically in respect to that? Yeah. So we had a great conversation. With Chloe White the other day. The podcast with her is actually up currently, and obviously she had a big hand in drafting that legislation, and it is seen to be this real crypto mecca now. She was saying that Dubai is just the mood there is just so energized and everything's going great. And I agree with you. Do you think that Australia, the government in Australia, has the appetite to go down that path and be that kind of front running, jurisdiction?
Unfortunately, I think the answer to that is probably no. As much as I would love them to, I think Australia is going to be a close follower of kind of what occurs in the US/UK, which is traditionally kind of the path that Australia takes. But I would love for that to be different. I'd love for us to kind of take a lead on it. And I think we have an amazing opportunity. The industry here punches well above its weight and can add so much to the Australian economy and the world as well.
Yeah, for sure. I totally agree with you. Well, speaking about the world, you recently went to Consensus in Austin, Texas. Is that right?
Yeah, that's right. Yep.
What did you find to be the general sort of mood over there? Because again, in my recent discussions and with what's happened in the US, it seems like the US is either softening its stance on crypto or becoming more excited and open to it. Is that the mood that you got being over there?
Look, I think it was a lot more upbeat than it was last year. And the main reason for that was coming into the conference, there were two positive for crypto bills that were passed in the United States.
Yeah.
And that was really energized, I guess, and created the vibe for the conference as a whole. And we had the Majority House Whip give a presentation as well, and he was saying how much he felt that the SEC was going down the wrong track and Gary Gensler's on the way out, and it really created a really positive vibe.
That's awesome.
The presentation that he gave. But unfortunately, at the end of the conference on the Friday, I think there was a veto of one of those bills by Joe Biden. So,
I didn't realize that.
What the vibe is now at the moment, given that. But yeah.
That's a real shame. Yeah, I mean, look, what about other jurisdictions? I mean, do you keep abreast of what's happening, say, in the UK, or Europe with the MiCA regulations? Do you sort of keep abreast of that for your own work?
I do, only to a really high level. The detail, as a full-time practicing lawyer in Australia, only providing Australian advice, it's really difficult to be totally on top of what's going on in other jurisdictions. But at a very high level, yeah, I do keep abreast of it. And when clients come to me asking for recommendations as to where they might go to do one or the other thing, we're part of a global law firm network, and we kind of tend to refer them out to lawyers that can help them in the relevant jurisdictions where one or other thing might be a bit more favorable for what they want to do.
Yeah, nice one. Yeah, well, because as you said, like, in Australia right now, things are sort of a bit grey, I guess. What are the kinds of things that you would refer a client who's in crypto overseas for that we don't particularly, cater to very well here in Australia?
Probably two things. One is where they want some sort of legal recognition of a DAO structure. So we
Yes.
would refer them on to lawyers in jurisdictions where that is the case. Sometimes taxation is also an important issue. So we might refer them to other jurisdictions for tax structuring and advice where they're going to do things on a global scale and they need tax advice. But also where there's more certainty around whether or not a token is a financial product or not, or some sort of security. But having said that, there is a misconception that is held by a lot of people in the industry and people that come to me that just because you might go to a particular jurisdiction where there's a bit more certainty, that certainty only exists in relation to your activities in that particular jurisdiction. So to the extent that you undertake activities outside of the jurisdiction, you're still subject to the laws of the relevant jurisdiction that you're targeting, which is not a very well understood concept.
Yeah, that's a bit strange to me. I mean, maybe I did a commerce degree. I did a finance major, so I guess I understand those things. The general. Um, that's the crazy thing I find about crypto is that it's this Frankenstein sort of merging of tech and finance together. It's like the almost the ultimate iteration of fintech to a degree, even though it's been trying to portray itself as not being finance, but like I think among sophisticated or intelligent enough circles, we can all agree that it has the very similar characteristics to finance in general. And so that's really what drew me to crypto as well. Is that I've always been a tech guy. From very young, I had my dad had one of the first personal Macs at home when I was like 2 or 3. And so I've always been around tech, and then I did a finance degree, and I've always sort of liked the two. And then crypto is sort of this meshing of the two. And I came to it through, speculation in the first instance, which I think is the way that a lot of people did. I mean, it seems like you came at it from the other perspective. You were reading about it and stuff. And I know that probably as a lawyer, you wouldn't be able to make any, like, maybe talk about crypto tokens or any of that sort of stuff. But, did you make any like Bitcoin investments in the beginning? We can't call them investments because they're not investments. But did you buy, any crypto or any Bitcoin in the beginning when you found out about it?
Yeah, definitely. I got into Bitcoin first and then Ethereum and then quite a few other coins as well. But I'm only buy and hold. I don't trade. I don't have the time to kind of watch the markets to trade. But yeah, probably in about 20 different cryptocurrencies at the moment. But biggest holdings definitely by far are Bitcoin and Ethereum. In that
Yeah,
order.
well, I mean, Bitcoin and Ethereum, they're obviously the big ones, and I'm generally in the same. I'm interested to get your view on DeFi because DeFi is an interesting one. There have obviously been some judgments here in Australia against, or at the very least, ASIC bringing cases against a number of DeFi providers. Most notably Finder with Finder Earn, with Block Earner for their yield product. I know that with Block Earner they were found to be, and you can obviously you'll correct me if I'm wrong on these the technicalities of this, but Block Earner were found to be for one of the two to be running a financial scheme, but that they did the right kind of things to when they found out that they were running a financial scheme. They removed it. They did the right things. They took the right steps to check in. I know ASIC's appealing that at the moment and trying to get because they've been forced to pay costs to Block Earner. Is that correct for the extra time?
No, they haven't been ordered to pay costs for Block Earner, but they didn't have a costs order in their favour to have their costs paid or a penalty imposed. But I just want to take you up on one point that you made. The action that's been taken by ASIC against persons in this space is not in the context of DeFi.
Ah, interesting. I didn't
right?
realize that.
So to me, DeFi is decentralized finance. Obviously, that's what it stands for.
Yeah.
But these are centralized actors. They're doing centralized things. Now, one of the aspects of the block earner case was they were providing access to the DeFi,
Yes.
which
And they,
ASIC
yeah.
took action against them for, but they actually didn't get up on their arguments with respect to them being an issuer in relation to the DeFi products.
Yeah.
They did get up on the accusation that their earn product was some sort of investment facility run by a centralized actor,
Yeah.
as provided for under the Corporations Act.
Okay, so that's really interesting. So you're saying that there's a distinction here between is it control? Is that what you're saying? So in the case of DeFi, because it isn't actually within the control of the so-called investments that the protocol or whatever the protocol does is not within the control of a centralized actor. There may be a difference between the two.
There definitely is a difference, because if something is truly decentralized, it's really hard to go after a certain person to
Interesting.
say that they are an issuer of a product or somehow should otherwise be licensed. There might be a case to say that those that are intermediaries in respect of that DeFi protocol might need some sort of licensing. But again, in the block owner case, they didn't get up on that argument, but it's probably as a result of a defect in the argument that they made. I think the defect in the argument that they made was trying to suggest that block owner was an issuer in respect of these DeFi products that they were providing access to for their clients. Rather, they could have said that DeFi protocols are themselves the financial products, and block owner is not an issuer of them, but providing access to them requires a financial services license because you're advising and dealing in a financial product rather than being an issuer of a financial product.
And you think that would have been a stronger argument potentially?
Most definitely, yeah, most definitely.
That's really interesting. Yeah, because okay, so I didn't realize the nuance of that, but that does make a lot of sense because about control and obviously MezFi, which you've helped us to with the legals of we've been very clear from day one. This is a financial product. It's a managed investment scheme, but DeFi, yeah. So I see how DeFi is different. And a question for you then: a protocol, or actually, I don't even know if it is a protocol, such as Maple, for instance, where they have lending pools. Is that they because they have a license? If I'm not mistaken, is that correct?
I'm not aware of them having a license, to be honest, but
Okay.
I'm not on top of the detail of Maple, other than knowing that it's decentralized or intended to be decentralized finance. To the extent that there is a centralized actor, it wouldn't surprise me that they would be licensed, because it does raise, in my mind, a lot of regulatory issues having such a protocol in place.
Yeah, I believe that they do have a license because, for the most part, I think it's only wholesale or sophisticated investors that are allowed to use the platform, as far as I'm aware. When I had a chat with Sydney about it, I think that's what he said to me. So it wouldn't surprise me if they did have a license.
Okay.
So then, what about companies like MakerDAO, for instance? Like, them, they issue their the DAI, and then there's the lending pools and all this sort of stuff. Do they have any control? Or you're obviously not necessarily familiar with all of the different the protocols, but are you familiar with MakerDAO?
I'm aware of MakerDAO, but I don't know exactly how it is structured, so I can't comment on it from a legal perspective. But my understanding, though, is that it's probably a decentralized, fully decentralized protocol, in which case it's harder to go after a particular person or entity in relation to establishing that. Having said that, though, IOSCO, which is the international standard setting body for securities organizations, has put out a paper that does attempt to or does recommend to securities regulators in jurisdictions that adopt its recommendations to go after those persons who have sufficient control in relation to decentralized protocols and make them regulated under various regimes to the extent that there is sufficient equivalency with other types of financial products.
No, that's interesting. I mean, I think it's probably in everyone's best interest that that's the case. I mean, there are the two sort of kinds of actors in the blockchain space. You know, there's the cypherpunks and the Bitcoin maxis who they're sick of government, they're sick of control, and they want everything to sort of be out of the government's control. And then there's those that are looking at the technologies and how they can potentially make everyone's life better and whatever. And I think those of us who are for controls and for greater sort of accountability, I guess, can probably agree that if there is that greater accountability, blockchain will safely be there'll be greater uptake in it, because I think as long as these things are allowed to continue sort of unchecked, it definitely brings a bit of uncertainty in the space, in my opinion.
Yeah, I think that's right. Yeah, I think there's a happy medium there. There's two extremes, and I'm probably somewhere in the middle.
Yeah, me too. I mean, I'm not much of an extreme. I mean, it makes us a bit boring, doesn't it, John? But I'd rather. So I think a lot of people would rather jump on, listen to Michael Saylor going, Bitcoin's the only thing, and blah blah blah, and all the stuff that he does. But I don't know. Maybe there's room in this crazy world for moderates like us. Who knows? I wanted to ask you then, you mentioned DAOs before, and this was a question that I had for a previous podcast guest, and you said about having more certainty around them. So there was the judgment in the US about the DAO, and it was done in absentia, so they tried the case without any of the DAO members there, but they were found to be jointly and severally liable for not securing the network for a hack. Considering that, is it? I mean, are DAOs? And I guess this is. I don't want you to sort of give me a definitive answer. Obviously, a definitive answer doesn't exist. But do you think that that's probably the intention of DAOs, for them to be, for all the DAO members to have responsibility and liability, or do you think that they're more likely to be trying to be like an LLC structure, say in the States, or a proprietary limited company where there's a corporate veil? And if so, like, where's the intention, and who's doing it right, do you think?
Yeah, definitely those who set up DAOs don't have an intention for each of the members to be liable.
Of course not. I wouldn't think so.
And that's why people go to jurisdictions where they have more certainty around that. That doesn't stop actors in other jurisdictions taking action in relation to that DAO, notwithstanding, the potential corporate shield in other jurisdictions. But that's one of the things that I think will really allow the industry to take off, is that if we have legal recognition of DAOs and non-liability for those that participate in the network.
It is problematic, though, like not to be overly controversial, although I will be. But it is problematic, though, for people to vote on things, and we're not talking about shareholder voting where they vote for, we'll vote the directors in, or we'll vote this person in. We're talking about DAO members vote on every single thing that the DAO does with the money. So shouldn't they be actually liable for it? I mean, I don't see why they shouldn't be.
Yeah, I don't know. I'm not quite comfortable with that position, that all DAO members will all be like, who are they going to be liable to? They're all going to be liable to themselves.
Well, that's true, isn't it? Yeah.
Or is it the ones that voted in favour are liable to the ones who voted against? Like, it's pretty tricky. I mean, I think it's something that needs a little bit more thought. And I haven't actually undertaken that full thought process to sort of come to a fully concluded view on it.
No. I mean, that's look. As I said, I'm probably a bit too controversial about this sort of stuff. Maybe I'm just trying to shake the cage a bit. But no, but it is. I mean, we are in a very, like, regardless of whether the Australian government has a strongly defined position on crypto or not, we're a nascent industry at the end of the day, and everything is uncertain. I guess here's a question for you then. Do you see the future of blockchain becoming more or less decentralized, or more or less centralized? Sorry.
Probably a little bit more centralized, which is necessary for the purposes of regulatory oversight, I think. But who knows? I mean, maybe with legal recognition of DAO structures, that might change. It might be different.
Yeah, well, it may be different. I'm not 100% sure how it'll go. I mean, I think it probably, it started out very decentralized, and then, it's sort of begun to come back in. I mean, obviously there are issues on both sides. You look at FTX and the centralized sort of power that they had in terms of access to different things. It's quite clear that there needs to be greater oversight. And I mean, that's not necessarily a decentralized versus centralized issue. That's more of a regulation issue, if I'm not mistaken.
Yeah, regulating centralized actors who are in this space, which I think is really important, and which is coming in Australia and pretty much other jurisdictions as well all over the world.
Yeah, exactly. So, a question for you then: if the regulations that Treasury have suggested were to come into place, do you think that would be a positive or a negative for the ecosystem in Australia in terms of AFSLs for crypto exchanges, etc.?
Look, I definitely think it's a positive, and it's a positive from a number of perspectives. One, it lifts the standard of general operating processes and procedures for those that are licensed based on the minimum standards that apply to all licensees.
Yep.
Also, it provides greater consumer protection for those that interact with these service providers. And thirdly, it also kind of legitimizes the industry to a significant extent as well. And maybe fifthly, it might even help with the banking issue. There's significant debanking going on for those that just use crypto and those that are centralized actors in the crypto space, which from my perspective is probably not a good thing at all. And, I think that it's really difficult for any business or person to exist in this country without having a bank account.
No doubt.
It should be a fundamental human right, and potentially even a fundamental corporate right for someone to have a bank account. And I'd love to see that day here in Australia.
Yeah, no, I totally agree with you. What is the reason, in your opinion, then, that there are these issues with banking for crypto companies?
It's really difficult to say because the banks aren't very open about it. But there's a number of reasons. One is the risks associated with dealing with particular centralized actors and the number of complaints that they might get as a result of their clients using that particular exchange, for example. So something that came up last year was that a particular exchange had more people complaining in relation to scams that were dealing with that exchange than others. Right? That's a legitimate reason for a bank to potentially debank a centralized actor, because they haven't got their processes and procedures and monitoring up to scratch to reduce those instances of scams. Another reason might be that there's a bit of competitive tension, I guess, between decentralized finance and centralized finance, and to an extent, that I want to help facilitate, I guess, to an extent, their reduction in their, I guess, market share in the financial services that they provide from DeFi. There might be other reasons why they might see a centralized actor as maybe a centralized exchange or other person in the crypto space as being a much higher risk to them, and therefore not worth necessarily the time and effort associated with monitoring and supervising and doing all this extra work that they might be required to do under AML CTF laws in dealing with that particular client.
That's really interesting. It makes me wonder, though, I mean, because, if you want to talk about if you want to talk about dealing with companies or entities that have a lot of scams that come through them and issues, I mean, aren't the banks themselves the greatest throughput of scams in the world? I mean, if you're talking about volume of scams that are sort of found, it's much less cash and much more,
Yeah.
much more banks that are taking in those scams, right?
Someone made a really interesting comment at a conference that I attended when the banks were going around saying, well, 30% of all scams go through crypto. And then this person who was on the panel was like, well, 100% of scams go through fiat in one
That's
way, shape, or
it.
form. Well, so
That's it.
who's but taking deposits for all of this fiat and facilitating transactions and whatnot. But yeah, it was a very
Exactly. I mean, exactly. It's like the pot calling the kettle black to me. It's like crazy, and not to mention. And then I mean, this is my favorite thing to say, and maybe you'll have a comeback for me. I don't know, but you know, where is the liability of mobile phone providers in all of this? Because they are the 90%, the text messages that we get and the scam text messages. I mean, I don't have the statistics in front of me, but I would say that at least 20 to 30% of all scams in Australia come from those stupid text messages that never stop. And these mobile phone providers, they're not doing anything. There's no, we have all this AI technology, but there's no capacity or no accountability for them. Oh yeah, I clicked the link on my phone and the text message that came through, and then I lost all my money. But oh no, the mobile phone Optus isn't liable in any way, shape, or form. It's ridiculous.
Yeah, no, I think that's changing or has changed. I'm not on top of the detail, but the government has set up the National Anti-Scam Centre, and there will be obligations on, if not already implemented, telcos and social media providers to kind of have more responsibility in relation to this, and including banks as well. So
Oh,
there is
that's great.
work that's being undertaken in this space. We're not there yet, but it's definitely in the works.
Well, it's so easy to just point the finger at crypto and go, "You guys are the problem." But it's good to hear actually that there is an understanding that it's not just going after the low hanging fruit, so to speak, because and being part of the industry, sometimes you want to just throttle people, when you hear this stuff, and you're like,
Yeah.
"Oh my God, it's just never ending, and there's no accountability whatsoever over there." And another thing that I like to and I'd like to get your take on, being in financial services, is AML CTF. So I've having gotten all of this up with MezFi and what have you. We've gone through all of the different licenses and all of the different. We've gone to all the different REs, as you're very familiar with and aware of. And a lot of them have issues about AML in relation to wallets. But there's this thing about but banks and everything are so much cleaner and so much safer. But there's this burden on crypto to prove provenance and all this stuff. But in reality, Chainalysis and these on-chain analytics companies can track everything to within an inch of itself. But in fiat rails, it's much harder. But so it's almost like this reverse thing where, because we can do all of these things, there is this burden on us to do them, if that makes sense. Like I don't understand. I don't quite understand it, but like okay, you have to track everything to within an inch of itself and prove this and prove that. But with fiat rails, they're much looser, it seems. Anyway, I don't know if you feel that's the same way.
Yeah, look, I think that crypto has had a bit of a bad rap, I guess, and particularly in the media, and therefore bringing traditional financial services players on board when they're not, particularly on top of a blockchain and how it works. They're going to be cautious because most of what they know is, the negative side of a crypto. So it just takes a little bit of education and time to actually get them on board to understand that, one, it's not anonymous. Two, there are various tools that allow you to track pretty much everything on the blockchain. So it's just a matter of time.
Yeah, it makes sense. And hence why I think, to our point before about fit for purpose regulations where, crypto providers don't necessarily have to go to these financial services guys, that don't know anything about the space. We can actually have fit for purpose providers who know about crypto, etc. Look, we'll wrap it up in a sec because I'm aware of the time. Let me ask you one more question. This is my the conclusionary question of each MezFi Meets episode. So, John Bassilios, as one of the, if not the preeminent legal mind in the crypto space, I would like to have you impart some tips to our listeners today for anyone that's looking to start a blockchain business. What are your 3 tips from a legal regulatory perspective that people should keep in mind if they're wanting to start a crypto business today in Australia?
Look, I don't think that my tips are all necessarily legal, but the first one is get a good lawyer who understands the space. Second is get a good tax lawyer or tax accountant that understands this space. And the third, which is definitely not legal, is have really good developers and security testers and whatnot for your blockchain project, preferably local ones, because it's harder to deal with people that are overseas and harder to enforce contracts with people that are overseas. So to the extent that, you can get someone who's local, I'd strongly recommend that.
Yeah, no, that's really good advice. And so those 3 tips will most likely, or the second 2 tips anyway, will reduce the need to spend money on the first tip on the lawyer in future as well.
Yeah, exactly right.
All right, John. Well, thank you so much for your time today, my friend. I really
appreciate it. I enjoyed it.
Yeah, no, me too. And yeah, I mean, I look forward to working together further, as well as to see you around at more conferences. And I look forward to your next iteration of Blockchain Australia / whatever it is, whatever else it is that you end up doing in the space, because I know how passionate you are about it. So yeah, thanks so much again, mate, and look forward to chatting soon.
Thank you very much for having me. I really appreciate it, and likewise. Take care.
Cheers, mate. Thanks for watching. If you want to find out more about MezFi, go to www.mezfi.com. Follow us on X, YouTube, LinkedIn, Instagram, and Facebook. You can see our shorts there, and look forward to the next conversation, and see you then.